Man, please.
Yeah.
Please. I'm going to open up insurance, put $2-3 million in my insurance, and borrow from that and put it back in. I never lose my money, ever.
Waka Flocka, he actually at our Primerica's convention, he admitted that he lost $5 million using this concept, and he said it was the worst financial decision he's made, okay?
All right, so a lot of y'all, they use Waka Flocka, right? When he talk about putting all that money in the IUL. But what a lot of y'all have not seen, Waka Flocka actually at a Primerica event. Y'all heard of Primerica? Gary Cornegay with Primerica. They recorded Waka Flocka saying that putting all that money in an IUL was the biggest mistake of his life. See, they don't show you that. They show you the videos of these celebrities using these products, and they use videos from 8 years ago, 5 years ago, 6 years ago. But they don't show you the videos of them talking about the concept today.
Deal with the word banking. They say by investing in universal life insurance is like infinite banking. You become your own bank. I got a question for you. But if I'm buying a universal life insurance policy or index universal life policy, it's like me becoming my own bank, right? If y'all dealt with anybody, now you know they're gonna have to go back on their words if they say, well, no, I'm not saying, no, I want you to say it. That's one of the biggest sales. Outside of living benefits, what I told you is the whole cash value part, which I told you how cash value work all through the deal. But on this shit, you tell me, no, man, this like becoming your own bank. Let me ask you something. Am I my own bank? If I do index universal life, I'm the bank? Yeah, dog, you the bank, dog, you like the bank. Before we go any further in the life insurance part of this stuff, let me ask you a banking question. How do banks make money? I'm the bank. Yeah, you the bank. How do banks make money? Where do banks get money from? That's a better. Where do banks get money, right? Like if you in your local area, right, and a brand new bank opens up, right? They build it from scratch, brand new bank opened up, right? In order for that bank to start doing transactions, because you said I'm a bank, right? Okay, but when a brand new bank opened up, where does the bank get the first set of money from? It's day one. It's a grand opening. I want you to get this. It's a grand opening. Does the bank have $0 in it when it opened? Does the bank got no money when it opened? The Federal Reserve, which is the entity responsible for printing money, no bank that opens up starts from their own money. If a Chase Bank open up, a Chase Bank don't got $0. It don't open its doors with $0 and bank on the first person to walk in the door to deposit $15 and not a bank got $15. So if you telling me I'm the bank, who give me money? When I start this policy, without me giving it no money? Because a bank don't give money to itself. If I got a universal life policy, if I got an index universal life policy, and you telling me I'm the bank, who give me money up front? Who's my Federal Reserve? Before I give $1 in premium, I ain't pay no money in premium. I ain't give them people no money, and I got money. Show me a policy work like that. Because if you can't show me a policy that work like that, then guess what you can't tell me? You can't tell me I'm my own bank. Because if a bank starts from scratch, they get money from another entity. Well, watch this. The bank gets money from one way, and they intake money from customers, from us, right? From our deposits and our investment, right? So they take in money from this side, and they collect money from this side. Question, I'm the bank, right? Who I'm getting money from? All I know, I'm paying premiums. If I'm the bank, who deposited money into me? The bank gets deposit money, they get fed money, they take the money that they receive. Two things they do. They reinvest the money, but they reinvest the money from others. Go get high rate of return. A bank also reloans the money out. So here's the question. I'm my own bank, right? Who do I reloan the money out to? Because if I'm a bank, I can loan the money out to outside people. The bank don't loan money to itself. Think about how crazy this is. How does Chase Bank get a loan from Chase Bank? The money is originally in Chase Bank. Think about this. You trying to tell me the concept of being my own bank, and I'm the one got to put up the money first, and then when I want the money, I got to borrow the money from myself. The bank loans money to other people. How the hell can you be a bank if you loaning the money to your damn self? Not only do you loan the money to your damn self, but you paying somebody else back. A bank loans money to outside people, collects the interest from them. I loan you $1,000 because of the interest. The bank say I'm gonna charge you on that loan. I say on a credit card, I won't charge you as 20% on. That's what I say I want. I'm the bank, right? That's the terms. When a person goes into a deal for a mortgage or a deal for a car, something like that, whatever business, who come up with the terms? Is you and the bank, who come up with the terms on the loans and stuff like that? Who come up with the terms? Because if I'm a bank and I'm dealing out loans, I'm supposed to be lending out money to other people. You ask somebody with a universal life insurance policy, do you set the terms? Do you set the terms of the loan? If you the bank, right, and you saying you loaning money to your damn self, which is crazy, my question is, who chose the interest rate that you get back? The interest on the loan, right? If you the bank, did you choose the interest? If it's your money and you the bank, then you should come up with the repayment terms. You should determine what interest rate you give yourself the money back from giving the money back to yourself on some crazy. Think about that. You don't control shit. You ask anybody. On a universal life, index universal life policy, let me ask you something. If I take a loan out to me, even though banks loan to other people, right? What's the interest on the loan? Do I have the power to change that interest? Because I'm the bank. My insurance already told me I'm the bank. Do I control the interest on the loans I take from myself? Since I am giving the money to myself, right? So if I'm the bank, like a real bank, that means I'm supposed to be the one controlling the terms of this shit, because real banks control the terms of the loans they give out. Do they not control the terms? The interest they want to get back? How fast they want to get the money back? Do they not do that? So if I buy a universal life policy, index universal life policy, then I should be able to control the loan term. I should also be able to control the interest rate. Ask anybody with a universal life policy, who controls the interest rate and the terms of the loan? And that'll tell you who the real bank is. The actual entity who's actually operating like the bank is the insurance company. They're the one who got the new money from you, and then they turned around and made you borrow the money you gave them. And not only did they make you borrow the money you gave them, they're the ones who control the terms of the loan. And they're also the ones who charge the interest on the loan on the money you gave them. And watch this. If you decide to pay the loan back, ask yourself this question if you're the bank. And if you don't believe me, call the company. Say, listen, if I take a loan out this policy, right, and you charge me interest, say, let me ask you something. The interest that's paid on this loan, who get that money? On a policy loan from a universal life, a whole life, or index universal life policy, who does the interest on that loan money go to? I'm about to show you who's the bank. One of the ways banks collect money is through interest, right? So if you're a bank, you like a bank, then you're supposed to make money on interest on loans. If I do not make money from interest on loans, then I am not the bank. So it is actually incorrect for you to tell me that if I buy this policy that I'm like infinite banking. You don't operate shit like no bank. Because one of the things you don't do is you don't collect interest on loans. And you also do not control loan terms. Another way banks make money is fees. Bank makes billions of dollars off of fees, overdraft fees, this type of fee. They make money on fees. I ain't saying I'm gonna chase Bank of America. Y'all told me I got an IUL. All right, so tell me, how do I make money off fees? I'm a bank, right? You told me this is infinite banking. I'm trying to connect myself to a bank. How am my own bank and I don't collect money off fees? I don't make money off of interest on loans. I don't control any loan terms. This policy starts with my money. I don't know one bank who opens its doors with their money. But this shit starts with my money? So y'all take my money, you open up this policy, call me the bank, but then you treat me like the customer of the shit. So what you mean? Wait. I'm the customer of it? Yeah, you the customer of it. How you feel? Because you the one got to take a loan out. You the one that don't control the terms. You the one got to pay the money back. And if you don't pay them the money back, they going to deduct the money from the debt benefit if you even have one. And the interest you pay them back, the insurance company get the money. The insurance company charge you fees. Damn, well, who's the real bank here?